about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Neeraj. Rest of Asia is looking slightly weak today. The G20 summit kick-starts in Osaka, so you're going to be keeping all eyes out there to see what happens between Donald Trump and Xi Jinping, and if there's anything that comes out from there that affects the shape of the equity markets. Before that, at least, the SGX.
Big deals for India.
Yeah, big deals for India too. And,
well, but how do you believe him?
But aside from that, ahead of the G20 summit, you've got gold prices also which have surged. So almost a 1% bump up on an intraday basis for gold ahead of G20 summit. And the conversations that are happening are suggesting that, while most of the risk backing the surge in gold prices have been factored in, there is still that element which could take gold prices northwards of $1,450 per troy ounce. So we'll have to sit and watch out to see whether or not that happens. But for the futures and options space, yesterday was the last day of the June series and the worst in the year. So let's take a look at what happened and what transpired in yesterday's session and how we are set up as we step into the July series. Navneet is standing by with the keys.
Thanks for that, Devina. Good morning to both of you. Well, the losses were definitely marginal for the June series, yet it was the worst series for Nifty, at least for 2019. Indian markets underperformed the globe. That was one reason. But nevertheless, both Nifty as well as Bank Nifty touched their record highs also in the series. So let me just take you through the ranges that one saw during the series. And for Nifty, the high was 12,103. This is also the all-time high levels, and the low for the series was 11,625. So going into July series, probably this will be the first level on the downside to watch out for. The gyration was about 450 to 460 points for Nifty. For Bank Nifty, which is trading at a higher trading band now, 31,000, it's also above its 20-day moving average. This was the high levels and this was the low. So Bank Nifty gyrated about closer to 1550 points for the series. And Bank Nifty has also been outperforming, in fact, in the last 2 to 3 series. Well, Nifty, the worst performance comes in. If you look at the performance for the June series, we were down about 0.9%. Last time we saw a negative return coming in was for the February series, where Nifty fell about closer to 0.3%. So the losses were only 100 points, but still it happened to be the worst series for Nifty. And if you look at Bank Nifty, this was the third negative series coming in for Bank Nifty as well. Last time you saw negative returns coming in was in the month of February, and also for the April series, I believe Bank Nifty underperformed the Nifty. So let's see right now, though the technicals are suggesting Bank Nifty is better placed, whether we can see that outperformance coming in or not, we'll have to wait and watch for that. Market breadth. Now remember, June was a month where we were discussing market breadth has been pretty weak, though in the last 2 days it's been better. Out of the 196 stocks, 132 stocks declined, and you had 64 stocks which advanced. And if you compare it to the last 2 series, the market breadth has definitely worsened in the June series. Looking at the stocks which were the gainers and the losers, the top 5 and the top 5 gainers and the losers for the June series, the list will come up on your screen. Tata Global Beverages was one of them which outperformed for the series. We did see some strong gains coming in for that. So it was all the quality stocks which performed really well. Tata Global Beverages was one of them. And on the losing side, remember, the list will be dominated by companies which have been suffering due to corporate governance and high pledge issues. So Tata Global, Syndicate, Voltas, Torrent Power, REC, all these stocks saw returns of between 13 to 16%. On the losing side, we've already discussed stocks like Jet Airways, Jain Irrigation, Reliance Capital, PC Jewelers, and also Reliance Infra. All of them saw cuts of between 40 to 50%. Well, going into Union Budget now for the July series, the rollovers are actually stacking up well. So if you look at the rollovers for Nifty, it's at 80% higher than the May series. And for Bank Nifty, it is at 81%, though slightly lower than May series. But still, it does appear to be on the higher side. In terms of sector-wise, where the rollovers are stacking up well, you've got engineering, metals, and power, where rollovers have been on the positive side, whereas on the neutral side, you've got sectors like banking, cement, and IT, where rollovers are just about looking okay. But there are a couple of stocks within these packs which are performing pretty well, and the negative rollovers continue for sectors like auto, pharma, which have been the laggards for a while. Alongside, you've also got consumer goods and media, where rollovers are not looking that great. Back to you guys.
All right, Navneet, thanks very much for that. So that's a quick wrap out of what we are getting into for the month of July and what happened in the month of June. Siddhartha Khemka, Vice President and Head of Research at Motilal Oswal Financial Services, is joining us on the show with his fundamental opinion. Siddhartha, thanks very much for taking out the time. Lots of newsworthy stocks to discuss, but particularly focus on what the SEBI did yesterday and how it has its bearing in the NBFC space, particularly most of the AMCs.
Yeah, good morning. So yes, a lot of developments for the market to track, and that is why I think the market has seen that kind of range-bound volatility that it has been keeping up with last few days. And on top of it, we had an expiry on which 34 stocks got out. So yes, coming back to the SEBI regulation, that was something that I believe would have come given the issues that were at hand, and the regulation now comes at a time where a lot of liquidity squeeze is there in the system. We are seeing incrementally every day some or the other new company coming up and defaulting on their NCD kind of obligation. So yes, this will have an impact the way the RBI is capping on the sectoral investment for the liquid funds. A lot of these liquid funds were lending to the NBFC space, and that will only add to the woes, at least for in the near term. In the longer term, it will create a system where both the mutual funds, the AMCs as well as the NBFCs would look at a more structurally stronger source of raising funds for NBFCs, and for the AMCs a better or more a stable source where they can deploy those funds. In the meantime, because of these issues, there could see some decline or dip in the inflows for the AMCs, and that is something which has already happened in the past few days, and so that's a bit negative for AMC in the near term. But I think it's a structurally positive development for the system as a whole.
Siddharth, would you go out and buy an HDFC AMC today? It's an expensive stock which has a large liquid fund contribution. What happens to the stock?
Yeah, so see, if we were to discuss HDFC AMC, that's a particularly difficult question right now. At 2,000 rupees, I believe yes, the valuations are expensive, but there aren't any good AMCs which are available listed in the market as a separate play, and I think that scarcity premium is just playing up, which is what is happening in the entire market. If you see the bearing 15 stocks in the Nifty which are trading at a huge premium, the rest of the market continues to be laggard and decline. So we did some analysis a few days back on the Nifty as well as the Nifty 100 stocks, and we see that while the top 15 stocks contributed almost like the bulk of the returns for Nifty. So if you see the 15 stocks, they give a return of almost 30%, while the remaining 35 are anywhere negative 10 to 15%, and that gives the average Nifty return of almost 8 to 9% since the December 2017. And also in terms of valuations, these top 10-15 stocks are trading at a huge premium, be it in terms of PE, be it in terms of price to book, while the remaining are trading at a discount to their long-term period averages. So just to take a few names, we all know these names. So stocks like Bajaj Finance, Reliance, Titan, Asian Paints, Kotak, TCS, HUL, Ultratech, they are all trading at a substantial premium to their respective 5-10 year averages. And in the same time, stocks like L&T, ITC, M&M, Coal India, ONGC, they are trading at a discount to their long period averages. So that kind of divergence is clearly visible for last few months. Investors are clearly looking at companies which are showing good growth, have good management, in an environment where incrementally every day we are seeing one or the other corporate defaulting on their NCDs, you tend to stick to the quality names, and that is where HDFC AMC fits in. I think it will be very difficult for advising a fresh buy at these levels. If you are taking a fresh investment position in HDFC, you definitely have to have a 5 to 10 year investment horizon. That would be my view for HDFC.
Got that. That's HDFC AMC. Slightly more expensive as well, but the stock's got good parentage and it's doing well for itself. The other one, which is not doing so well, and it's not just media and housing finance companies that are failing to honor repayments on time. One of India's largest travel agencies, Cox Kings, has also failed to repay its dues with 150 crores on time. The company says it's trying to shore up the capital as soon as possible. Darshan's here with the details of the same. Darshan.
Yeah, so over the weekend they came out with an exchange notification and they said that they had to pay 200 crores, out of which they were only able to pay 50 crores. So the balance 150 crores is automatically termed as default, and this is on commercial paper. So that is something that Cox Kings has indicated, and they are saying that it's a cash flow mismatch and a rating downgrade that has impacted the delay. So clearly there is a lot of negative news coming in, and there right now a lot of rating agencies have cut ratings on their paper. They haven't cut it to default, but they have just cut it by one notch. For once, the latest was Brickwork, a 50 crore NCD, which was AA. Now it's AA minus. Same with the NCDs by CARE, AA one notch downgrade that has come in most of them. So there is definitely negative trend. So I went through the CARE report and what they said, and basically what they're saying is CARE is not happy with the lower than envisaged reduction in debt. Remember, they have sizable debt on their books, and they actually sold one of their assets, and that education business. CARE believes that the valuation was much lower, and the debt reduction didn't happen, and there's a high level of promoters pledge. Now, if you look at the promoters at this point of time, they own almost 49.8%. Majority is owned by the public shareholding, and they have a sizable amount of FI holding. Almost 39.4% stake is held by FI. Some of the large funds like a Capital, New Horizon, Vanguard actually are stakeholders in the company.
And the pain is visible in the books.
Yeah, so if you look at the numbers, debt is the big problem that is there, and cash flow is the other one. Now, if you take a look at the debt, that has actually gone ahead and increased significantly. From levels of 3,700, it went up to 400. They managed to pull down the debt by almost 1,000 crores in FY19, but remember, they sold an asset there, and the debt reduction wasn't that as much as everyone had anticipated. Even if you're looking at the financials in terms of revenues and the margins, that has been falling significantly. From a peak of 7,500, they've come down to 5,600, and the margins have come down significantly from 38% to just 11% currently. So they've been managing to hold on to their margins to 11%. That isn't holding well. So the financials aren't this thing. Couple of interesting things. They have cash of almost 1,860 crores on the books, and they sold education business for 1,400 crores. Now a lot of questions are being raised. If they have cash of say 1,800 crores on the books, why are they not able to repay the debt? What some people said was this was basically a lot of advances as well as forex which they cannot use. That is what. So the annual report is not out, and the balance sheet doesn't give details which they published in whether how much is receivables or that thing. So I think once we speak to the management, then only we'll get more clarity on why they were not able to pay despite having cash on the books.
All right, Darshan, thanks very much for that. Remember, Cox Kings, has not been having a very smooth year. The stock's down, I think, about 56% in a month. In a year, it's down closer to 80%. So that's the kind of brutality that the stock has witnessed. But there are many more stocks to discuss which are in the news, and there could be a silver lining for IT on the back of what Accenture has delivered in Q3 of FY19. Agam joins in for that, but I'm going to go to Mishika first to highlight all those stocks that are there in focus today. Mishika.
The first stock we're looking at is Sadbhav Infra. CARE has cut ratings for its subsidiary Rohtak Hisar Tollway to default from a BB+. Now, the downgrade was due to poor liquidity and debt coverage indicators. Then we have BHEL. NMDC has served a notice to BHEL for termination of contract for a new material handling system, as BHEL was not able to complete a 1,395 crore rupees contract awarded in 2011. The completion date for this work was February 28, 2014, and NMDC will now explore new options to quickly complete the work at the project. Next on the list is Excel Industries. The board approved the acquisition of chemical manufacturing unit of Net Matrix Crop Care in Visakhapatnam for 95 crore rupees by way of a slump sale. Lastly, let's have a look at the bulk deal. Rimco India acquired 83 lakh shares, which is 1.64% of Aster DM Healthcare at 120 rupees each, and the seller for this deal was True North.
All right, Mishika, thanks very much for that. Agam, IT is going to be in focus on the back of what Accenture has done, and it's a positive light.
Yes, absolutely. And the fact that they've gone ahead and upped their guidance will certainly be a positive. But of course, we've seen about 8.4% growth in constant currency terms for this particular quarter. Of course, this growth number is year on year, and that comes at around $11.1 billion. It's upped its guidance to 8 to 9% from 6.5 to 8.5%, and this, of course, is a very big positive, because this does imply that there could be some higher deal flow coming through for the entire sector. Moreover, from the CLSA's point of view, they've seen growth in the US, even though Europe has moderated. It's something that we have been highlighting of late, and they're seeing growth in CPG, retail, industrials, in the product segment, and this augurs well for the top 5 companies as far as India is concerned. So positive implications for TCS, Infosys, Wipro, and HCL Technologies. On the whole, as we said, it's a positive.
All right, thanks a lot for that, guys. So many more stocks to watch out for. Siddhartha, come in on the IT pack. On one hand, obviously now you've got the positive implications coming in from Accenture's numbers. Yesterday there was the article that suggested that there could be further pressure with regards to employee expenses going up and the likelihood of that increasing further. How would you balance these two aspects?
Yeah, so that is a factor that we have been witnessing for last couple of quarters, and in our analysis we also find that the increasing cost, especially from the employee side, mainly because of the higher proportion of on-site deployment, which is leading to this kind of increase in the cost and leading to some suppression in margins. And so the only other good signing factor is that the growth is now picking up, and the margins for the entire industry is marginally coming down. So that is where the overall view is that the major focus now is that once the growth is back, the industry will have to take some of the other initiatives, cost initiatives, to balance out the increase in the employee cost. So for the overall pack, we believe that there will be some margins pressure in the current year, and we don't expect margins improvement for a lot of these companies like TCS, Infosys. However, as I said, growth is something that we are very excited, and in that sense, we like Infosys, where the growth is picking up and catching up with something like TCS, which already trades at a very high premium valuation. And compared to that, stocks like TCS, Infosys and Tech Mahindra, they are trading at discount, and growth is picking up. So that's where the focus is, and that is where we like to play, or we are suggesting our investors to look at in the IT pack.
Okay, so that's stay on. So much more to talk about. Let's also focus a bit on the charts. In fact, just 5 minutes left for the pre-open rates to come in. Shubham Agarwal, CEO at Quantsap.com, joins us right now on the show with his thoughts, and Abhijit Phatak, Director at Definedge Solutions, with his thoughts too. Gentlemen, both of you, thanks for joining in. Abhijit, how are you approaching trade this morning?
Good morning, Neeraj. Nifty is definitely bullish as long as it is above 11,750, 11,800. And I wouldn't be surprised if it crosses 12,000, and maybe the next target is 12,200 in the next maybe week or 10 days.
So would you be comfortable taking a trade today, or would you wait and watch, Abhijit?
No, definitely there are lots of trades. In fact, TCS is looking bullish, L&T is looking bullish. L&T can be bought with a stop loss of 1510. I expect it to go towards 1600 and 1650. And another stock which is looking quite bullish is NCC. If it can be bought near 100 and 102 with a stop loss of 98, I'm expecting it to go towards 107, 110.
So you're keeping it to stock-specific trades. On the index, you're not initiating any trades today, Abhijit, I reckon.
Problem is on the first day of expiry, it opens, the futures open with a gap up. So it all depends on where it opens. If it crosses yesterday's high, 10.91, 11.915, then it will be bullish. Then it can go another 70, 80 points. It might be a fast rally. So yesterday's high, which is near 910, 915, is the resistance.
We'll take stock of this at around 915, 916, Abhijit. Shubham, what's your strategy today? Are you initiating any trades on the index?
Hi, good morning. If we look at the index, I think a very similar strategy that we should avoid index for today. And the reason is that yesterday we saw some pullback happening on the index. The overall trend still remains bullish, but I think it would be prudent to actually take a fresh view. Once the Nifty trades 50, 60 points lower from the current level, then I think we should use the pullback as a buying opportunity. So for now, on both the indices, the view will be to avoid. But if a correction of 50, 60 point happens on Nifty, then I think it might get lucrative. So for the time being, the strategy would be that, one should look to participate stock specific.
So let's get down to it then, Shubham. What are the stocks that you're recommending this morning?
Yeah, so two stocks and both are on the buy side. The first one is a buy on Siemens. And if you look at the overall sector view, the sector view looks very, very promising and most of the peer companies have been doing well. And specifically, if we see this chart pattern here, then we had a continuation pattern which saw a breakout yesterday. And we expect that this breakout will see follow-up buying. Now, given that it is the first half of the expiry, so options generally doesn't decay. The theta doesn't decay in the first half of the expiry. So the trade will be through options. So 1320 call option is recommended as a buy for a target of 55 and a stop loss of 18. The second buy call is a buy call on SDFC Limited. If we see the patterns there, it broke to an all-time high, then we saw a pullback, and now again the stock is resuming its uptrend. So we can expect some follow-up buying coming in on SDFC Limited as well. So the trade would be to buy the 2200 strike price call option for a target of 60 and a stop loss of 28.
Okay, got that. We've got 2 minutes left to go for market pre-open. The other pocket that will be in focus today is going to be most of these Bangalore-based real estate companies, considering that the government is, mulling to ban any fresh development there for the period of 5 odd years.
Media reports suggest that.
Yeah, media report.
Happen.
Yeah, that could happen. So, what does that mean for some of these players out there? Prestige, Brigade, Soba. Siddhartha, quickly comment on this.
Yeah, so there is a lot of hope and actually expectation from the budget, especially for the real estate pack. And we did some analysis again on the listed companies. So the larger players have actually gained market share, have improved the balance sheet, and a lot of these names, they don't have exposure to some of these large NBFCs which are facing liquidity crunch. So if you see the names like Oberoi Realty, Brigade Enterprises, Phoenix Mills, so we have these 3 companies in the real estate pack under our coverage. So all 3, Oberoi is anyways a debt-free company, just recently taken some debt for the new project. Otherwise, they have a very strong balance sheet. The other 2 have been relatively strengthened than balance sheet in the last few quarters. And post the RERA implementation, we have seen that some of these players have actually gained market share. If you include the others like Sobha or the Godrej Properties, that makes the case even stronger for some of these large national real estate players. Now, coming to the expectation, there is a strong expectation from the budget that government would provide some incentives or stimulus.
Siddharth, just excuse us. We'll just come back to you on a moment from now. Actually, we also wanted to know, what do you think is the impact of this possible news? It's not done as yet, but possibly some bit of ban on development in Bengaluru, because that will have a big impact on those companies, Devina. But the stocks have done well.
Yeah, they've all done well. In fact, you've got Prestige Estates, which has seen a good move over the last few trading sessions, alongside Godrej Properties, though. But cues for trade this morning as we set up for pre-open, and I think the pre-open ticks are already up. Asia was looking weak, but for the open now, Nifty's open flat, slight positive bias. You've got Sensex, which has gained a little bit more. Individual stocks, then we come back to this in a moment from now. Individual stocks is also, you've got a whole host of gainers, a bunch of losers, just I think 6 or 7 names that are showing you a decline, and the maximum cut as well is just about 0.8%. Tata Motors, for one, is down in the session. Now they're picking up. Indiabulls Housing Finance is the top gainer. That's up about 1.6%. Adani Ports, 1.5%. UPL, Sun Pharma. Auto names are coming back. So Maruti now at 65.58. M&M doing well, 1% higher. HCL Tech, NTPC. NTPC is actually not a bad week. The stock actually, since its announcement of its joint venture with Power Grid, on a daily basis has actually been doing well. Tech Mahindra, IT as a pocket will be in focus today on the back of essential numbers and their guidance being upped. Tech Mahindra is doing okay. Infosys is fine. You've got the likes of Asian Paints also, which is up marginally. 69.01, we might actually land up reaching that 69 to the dollar mark, maybe in intraday trade. We're already at 69.
Well, above 69 would be quite a telling thing. Let's wait and watch if that happens, and which also points towards a very sudden, sharp up move over the last 3 days in the rupee. So should be interesting. Let's wait and watch. What it does to the IT stocks is a different thing altogether. But IT today could well be in focus because of Accenture's numbers, as Devina said. Very quickly, 2 or 3 pockets. One of them is the Bengaluru-based real estate company, Sobha Prestige Brigade. Let's see how they've started off. The news reports damning. If indeed this turns out to be true, it's very negative. Something like this is too radical, so I don't quite know if it will happen or no, but the stocks are certainly correcting. HDFC, AMC, Reliance Nippon Asset Management, to an extent the likes of Edelweiss, Motilal Oswal, because they have a small AMC, rather a sizable AMC arm too. Let's wait and watch if those are reacting, but no, I don't see the asset management companies reacting too much to the SEBI's news yesterday. Motilal and Edelweiss should also come up on your screen, though I doubt that there will be big reactions if the pure play ones haven't reacted as much. No, maybe Motilal Oswal does have a reaction. Edelweiss marginally off, but let's wait and watch. Early days as yet. Lastly, Cox Kings. Very quickly pull that one up for you, and let's see what happens there. 10% lower, not surprised out here. Well, so this one is expected to be lower. And Devina, I mean, the only point is we don't know. This is media reports. Whether or not a government can take a step of saying no development for 5 years until the water crisis gets solved, I think it's too radical. I mean, something like this to get implemented is a bit, difficult to believe. So maybe the stocks will react today, but don't quite know how justified it would be.
They have, but it's probably not to that big an extent also. Prestige, for that matter, is not even reacting. It's just done marginally. But Siddhartha, since we were on that topic, just quickly your comments on how negative this could be. I mean, this obviously may be a knee-jerk reaction, but this is not like confirmed news. It's just media reporting.
Yeah, so definitely, if something of this sort happens, it will be negative. This has not happened in India so far. If you see most of these developers, the presence of Prestige, Sobha, Brigade, to Godrej to some extent, they have about 12 to 25 million square feet of development, which includes residential as well as commercial. What we understand is that government will meet the developers to discuss the issue, and there has to be some midway. It cannot be that you can just ban for 5 years, because a residential or maybe the real estate demand is something that government needs to fulfill. That is very high on the government's agenda. So very difficult to comment right now, but it would be very interesting because there are many other cities which are having issues of water, and we are seeing another city like Mumbai where if they were to follow, this would be a big negative blow for the entire real estate space.
Okay. That is real estate as a pocket right now. The other focus is going to be on the oil marketing companies. India's fuel retailers have been facing trouble on 3 frontiers in the June quarter: cost, pricing and demand. This has hurt their operational matrices, and as is expected to reflect on their financials as well. Samit Sarkar, he's standing by right now to explain exactly how. Samit.
So if you see the state-owned oil marketing companies, that is Indian Oil Corporation, Bharat Petroleum and HPCL, now they are expected to report a weak set of numbers in the first quarter of financial year 2020, and this is because of a weaker refining and marketing environment, possible inventory loss and tepid growth seen in the consumption. So I'll start off with the inventory first. Now generally, if you see in this chart, there's a direct correlation between the crude prices and the inventory gains. So if the crude prices average higher compared to last quarter, as you can see in the first quarter of FY19, crude averaged at around $75 per barrel, as against $67 in the previous quarter, and thus all the three oil marketing companies had reported an inventory gain in that quarter. And if there's an other way around, as you can see in the first quarter, where the crude averaged lower at $50.8 compared to $55 in the last quarter, all the three oil marketing companies had reported an inventory loss of close to 6,200 crore rupees. So there's a direct correlation between crude prices and inventory gains. However, in the fourth quarter, though crude averaged lower compared to the previous quarter, the oil marketing companies had reported an inventory gain here, but that was because throughout the fourth quarter of financial year 2019, crude prices were increasing, and that's the reason there was an inventory gain. Similarly, in first quarter, though crude has averaged higher compared to the fourth quarter, there's a high possibility that the oil marketing companies would report an inventory loss, and that is because of the sudden drop that we had seen in the crude prices. As you can see in this Brent crude chart, Brent crude prices had dropped by more than 20% from its high of around $75.6 per barrel to close to $60 per barrel. And because of this sudden drop in crude prices that came in just 12 days, there's a high possibility that all the three oil marketing companies would report an inventory loss in the first quarter of financial year 2020. Now, because of this inventory loss, the refining segment of the oil marketing companies would also be weak. Now, Singapore gross refining margin, that is the Asian benchmark, now that averaged 10% higher compared to last quarter to close to $3.5 per barrel. Now, this generally means higher income for oil marketing companies, but because of this higher inventory losses, this income won't be enough for the oil marketing companies, and they might report an inventory, they might report lower GRMs in the first quarter of financial year 2020. So what will happen is the core GRMs could well be high in the first quarter, but the GRMs adjusted for inventory could turn out to be lower because of this inventory loss. Now, in the June ended quarter, general elections in India also restricted the oil marketing companies' ability to earn higher from gross marketing margin that they earn on sale of every liter of petrol and diesel. That is the markup that they get. Now, if you see in the fourth quarter, they earned nearly 5.85 rupees per litre on sale of diesel and petrol. Now, this dropped by nearly 67% for petrol and nearly 44% for diesel in the first quarter compared to the fourth quarter. Now, this big drop that has come in the gross marketing margins would keep the marketing segment of all the three oil marketing companies subdued. Lastly, the consumption. Now, that was also a bit flattish in the first 2 months of financial year 2020. As you can see, the total oil consumption has remained flat in the first 2 months of FY20, that is April and May 2019. Although petrol and diesel consumptions here have increased, but ATF, LPG, kerosene and other product consumption have declined for the oil marketing companies so far in the financial year 2020.
Okay, Amit, thanks so much for putting that into perspective. Wonder what crude is up to. We just bring oil prices up on the screen once as well. Well, no big up or downward. So Brent and NYMEX have been largely around this range of 56 and 66 now for the last 3 or 4 sessions. So no big changes there. FI flows have largely been subdued too, but the currency is strengthened very well. Now it's 68.96. So remarkable going for the rupee vis-a-vis the dollar at least. The dollar index had broken below key levels. I don't know if it's inherent dollar weakness over the last few days which is leading to this, but there's some strength in the rupee for sure. Abhijit, Phatak actually looks at the currency too closely, if I'm not wrong. Abhijit, do you still look at the rupee charts, and what do the charts indicate?
Yes, in fact, I was expecting this break below 69 for some days, and if it closes here, it's quite, my next target will be about 66.
Well, let's wait and watch if that happens. Okay, the other bit, and me and Deven were talking about this earlier as well yesterday, was the Psu Bank performance. The last 2 or 3 sessions, a lot of PSU banks have put their hands up and done very well. Shubham, yesterday may have been an off day, but Allahabad Bank, day before yesterday, very active. In today's session, as I look at the pre-open session, UCO, IOB, United Bank, Corporation Bank, all of them are doing very well. Central Bank of India, 2.5%. I don't know if the market believes that a lot of funding which is going to MFs will now start going to banks, and maybe PSU banks could also get that. I don't know what's the reason, but PSU banks have been doing very well. Maybe it's recapitalization. But technically, which of the smaller PSU banks, or maybe even a large PSU bank, looks best placed for a trade?
Neeraj, I would want to go with Union Bank and Bank of India because if you look at the chart patterns there, we have already seen a large correction But post that, there has been a decent consolidation, and now we have seen that the pullback has started coming into action. So I think Union Bank and Bank of Baroda, however, most of the other banks also have a very similar setup, but these are the two names which will be preferred with a trading perspective right now. So Union Bank can be bought for a target of 82 with a stop loss at 76. And if you look at Bank of India, then the target for the same will be 94 and a stop loss can be maintained at 86.
Okay, we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, a cash flow mismatch has led to Cox Kings to default on payments worth 150 crore rupees. The company says it will repay the balance sum by internal accruals and asset monetization.
NMDC has served a notice to BHEL for termination of a contract for a raw material handling system. The company had given the contract to BHEL in 2011. The initial date of completion was 2014.
CARE cuts rating of Sadbhav Infra subsidiary Rohtak Hisar Tollway to default from BB+. Poor liquidity and debt coverage indicators are the key factors behind the downgrade.
Residential developers in Bengaluru are in for a shock. The state government is planning to deny permission for construction of new apartments in the city, according to news reports.
Lastly, a key brokerage call for the day. HSBC has upgraded Alembic Pharma to a buy from hold. The target price has been hiked to 590 rupees per share from 575 earlier.
All right, just getting in a quick opinion on the currency before we hit market open as well. Bhaskar Panda is joining us on the phone line right now. Mr. Panda, thanks very much for taking on the time. What do you think is leading to this sudden strength in the currency?
So I think if you look at dollar index, it has been ceding some of the ground. Secondly, the inflows over at least last couple of days I've seen has been pretty nice. Third, if you look at the forward prices, forwards have gone up quite a bit, and that might be a good indication for exporters to come in and sell. Fourth, the oil prices have remained, even after the tension that is going on, still in a manageable level. So all these together, I think, is helping rupee recover against the dollar. And but going forward, I don't see it, going below 68.80 at this point of time, and maybe it will play a range of 68.80 to 69.30 for next 1 week.
Mr. Panda, we leave it at that. Very quick comment there from Bhaskar Panda, Senior Regional Head of Treasury and Advisory Group, joining us with his views on the currency. So 68.80 is the level that he places for the currency. Back to the markets then, 2 minutes left to go for market opening. Siddhartha, anything that you think is important from a stock perspective that you would like to highlight?
Sorry, Linda, can you please repeat?
Any stock ideas from your end?
Yeah, so there are some ideas that we are looking at in this market. One is the capital goods space, which we believe should now do well, given that there is a lot of expectation from the government to ramp up infrastructure, plus the valuations are pretty comfortable. So one stock that we like again in the large cap space is Larsen and Toubro. The company has had a good execution in the FY19 and has a strong order backlog. The only thing missing was the growth in the order book, which was pretty subdued for FY19. However, they exceeded what they guided for. And for FY20, we expect about 10 to 12% growth in the order book, and led by a sharp further continuation of this good execution. We expect a 15% earnings growth. So that's a stock one can still look at. We have a fundamental target price of 1850 on that.
Okay, that's L&T, a pick from Siddhartha. Khemka. Let's quickly go across and get some top trading ideas as well from our technical experts. Starting off with you, Abhijit.
Yeah, as I said, L&T and NCC both are bullish, and I would be looking at buying them on any dip for the next few days.
Shubham?
Yeah, so Siemens, SDFC were the two picks. I can add one more on that list, and that is Maruti, because auto is opening slightly positive. So Maruti can be bought for a target of 6,800 and a stop loss at 6,400.
Siddhartha, Khemka, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Abhijit, Shubham, if you guys can stay on, we'll just take in opening thoughts from you post-market open, because it looks like we'll have a flat start, but selectively, select pockets could do well. So it'll be interesting to see how they're starting off. Watch out for the Bengaluru-based companies, watch out for some of the NBFCs over the medium term. I think these new rules and the FSR2 indicates no support for them from the Reserve Bank. But the start is flattish in the session. This is quite unlike what the rest of the Asian screen is doing, by the way, because that was a wash with red. We have started in the green, which is probably not too bad. The mid-cap and the small-cap indices should also come up on your screen, and let's see what the broader markets are doing. We flattened out completely, by the way, for the benchmarks too, and the benchmark mid-cap and small-cap indices too lying absolutely flat. Let's get the heat map up on the screen, show what's moving and what's not. A lot of green, very little red, so the breadth is not too bad. Z, interestingly, starts off lower, so about 1.5%. Bharti Infra is a 0.5% downtick. ICICI Bank about a 0.5% downtick. So those are 2 or 3 names that you should monitor. Titan, after hitting new highs yesterday, looks like starting off soft. What's doing well? IT, after a dull day yesterday, starts off well. I don't know if it's got to do with the Accenture guidance or otherwise, but Tech Mahindra, Infosys, HCL Technologies, each of these starts off well. Dr. Reddy's and Sun Pharma. Now, you typically expect exporters to do well when the currency is weakening, not when the currency is trending, but the pharma companies too are doing okay. No particular trends, but for the fact that IT is starting off well, I reckon that's in part due to Accenture's numbers. Okay, let's talk about 1 or 2 pockets that I wanted to highlight in the session today before I hand it over to Devina for what's happening across the broader end of the spectrum. Firstly, the asset management companies, and no, we are not seeing a big gash. In fact, HDFC AMC starts off further on a new record high, 0.5% higher, but at record highs. Motilal Oswal, Reliance Nippon Asset Management, all three have a fairly decent start. So the tightening of the rules not having an impact there. What about some of the other pockets? Firstly, stocks which were trading at new highs yesterday, and all of them start off flat. Godrej Properties, after closing in at 1,000, starts off about 14 points or lower. SRF, though, continues to rise and shine, so good going for that stock as well. And no more development in Bengaluru. Devina, we're talking about this as difficult as it sounds, but the stocks are certainly reacting, Sobha in particular.
Look, reactions to the news probably. Moving on, you've got a few other names to keep an eye out on. Remember, while we're talking about real estate companies, record high on a daily basis for Godrej Properties. So that one seems to be bucking the trend, and let's see whether today it falls in line. 982 for Godrej Properties. The other stocks today that are doing well are some of these banks, the smaller names. Corporation Bank is up 8.5%. UCO Bank is up 7%, United Bank is up 5.5%, Indian Overseas Bank is up 5%. So a lot of action here. Manpasand Beverages picks up. Yesterday was also up in the session. Up today again, 4.8%. Aban Offshore, Central Bank of India again in that same pack. Then you've got ADAG Group stocks, RCom, RPower. These are the names that are doing getting some gains in today's session. Lupin has moved up. Radico Khaitan, we were talking about the stock in yesterday's session. That stock's up about 2% today. Lupin is up closer to that as well. Inox Leisure 1.6% higher. Then you've got Infibeam, IRB Infra, and some of the sugar names. Bajaj Hindustan is doing okay. Yesterday's session saw Sri Renuka also picking up some gains. Overall, market breadth slightly more flattish. You can't really give a trend at this point. 655 stocks advancing, 500 stocks declining.
Well, interesting start to the trading day. Nothing too dramatic, just specific pockets moving around, and IT certainly doing well. Abhijit, Phatak, IT stocks by and large doing okay today, but otherwise haven't had the best of days. Would you trade any of the IT names?
Yeah, one IT stock which I'm bullish on since many days. Unfortunately, it was sideways for the last almost 10 days. Is TCS. Any dip is a buy, and as long as it is about 20 to 20 on the spot. And I'm expecting it to make a new all-time high and maybe even go towards 2,400 hopefully this month.
Okay. A bunch of NBFCs in focus today for a lot of reasons. Shubham, anything in the NBFC space that stands out? A particular view on L&T Finance Holdings as well, if you will.
Neeraj, if we look at the movement of L&T Finance Holding, 4 to 5 days back, I think there was a piercing line formation which indicated that now the stock has already bottomed out, and we are witnessing some follow-up buying post that. So it looks very encouraging. I think from a trading perspective, one should look to accumulate. The trade can be built with a stop loss at 111, And on the upside, I would expect a target of 123. That should be the next move where L&T Housing Finance can move. So I think it's a good buy at the current level.
Okay. Deven Choksey with us as well, joining in on the show. Deven, good having you. Thanks much for taking the time out and speaking to us. PSU banks, Deven, have found their mojo the last few days. What is it that you are sensing amidst all the turmoil in the broader end of the spectrum, but the last 3 days seeing some bit of an uptick? People are buying PSU banks. Would you do the same? Why do you think this is happening?
Good morning, Neeraj. Obviously, I think the reasons are known. Government and the RBI, they are working on the formula where they would like to basically, I think, bring down the rate of interest. That should have a positive reflection onto the treasury portfolios of some of the PSU banks, particularly the larger ones. So that suggests that I think they have the positive impact coming into their balance sheet. On the other side, the consolidation move is going to accelerate, and possibly due to the consolidation of the PSBs, I would think that I think the stronger would be the PSBs hereafter, and that is once again the argument in favor. The third argument could be in favor is that I think systematically the non-performing assets are coming down into the system, and as a result of which I think your liquidity situation is improving in the balance sheet. On the top of it, I think the NCLT-led proceeds are also yielding results, and probably expected flow of money in the current year is going to be on the higher side. The last but not the least, at least for the time being, would be the valuations at which PSBs are quoting. They are compelling, they are attractive at the same time. Probably the worst is already factored into the price. And that's the reason for which I think you are seeing the attractiveness emerging, and probably the investors are buying on a contra basis to generate alpha as well. Whether I would buy across the board all the companies, the answer is no. My take has always been that I think some of the frontline PSBs are beneficiaries, including of the consolidation move. So certainly I think the likes of SBI, BOB, they would remain in the list. The mid and the small PSBs are certainly I think not finding very good favor with me. Also because of the fact that I think government is yet to spell out the policy on whether I think the PSBs would be allowed to have continuity into the management. If you keep on changing the management, then the banking business is not good for investors. Certainly I think I would like to see that happening. Maybe SBI and BOB as giving some visibility at least on this front, vis-a-vis others.
Okay. Deven, the other pocket is the oil, from the oil and gas space, is the oil marketing pocket. I mean, we just had Somit come in and talk about how, this quarter could particularly be a damn squib for this entire industry on account of lower demand, on account of the slowdown during the election period, and the fact that you'll actually see more inventory losses kicking in this time. Do you suggest that one stay out of this completely?
Yeah, for long I think we have been of the view that I think the OMCs are not the best bet to be in the market. And given the volatility into the crude oil prices, given the fluctuations that it is having, given the kind of GRM margin influence that these fluctuations carry, and the consumer demand getting put off because of variety of reasons, including I think some amount of slowdown impact seen in European region and elsewhere. So obviously I think if we are heading into this kind of a situation, it's not a good situation for OMCs. I think even the news pertaining to the Asian countries getting into a recessionary trend, including countries like Singapore, I would think that I think it's a situation which is not sounding very good favor with me. As a result of which I think we are likely to see the slower demand, lower GRMs, and that is one reason for which I believe that though not India per se, but I think global outlook is becoming quite challenging in this area of activity. So stay away from it for the time being. I don't see serious investors emerging to buy into the OMC portfolio at this point of time either. So maybe I think it is better bet to I think play with some other beaten down stocks where the fundamentals are showing relatively higher amount of strength and the confidence.
Okay, by the way, look at some stocks. So while we're speaking about Bengaluru-based real estate companies, Prestige Estates, Brigade, etc., are all going down. Prestige Estates is down 3% now at 269. Reliance Infra has started off lower, 3% lower at 57. Emami corrects a bit in the session, 2% lower as well in trade. So watch out for both of these names. And on the gaining side, it's really all about the public sector banks. Nothing else, which is quite dramatic, standing out in trade. Abhijit, Phatak, you mentioned about you taking a trade on the index only if it crosses certain levels. First 10 minutes, it's at 11,863 for the Nifty. Would you trade the index?
Yeah, in fact, I had said 910, 915 is the resistance for Nifty futures, and it made a high of 916, came down, but it is still around there only. So I would go long in Nifty futures if it crosses 11,920 with a stop loss of 11,890, and I'm expecting if it crosses another 70-80 points, maybe today only.
Shubham, first 10 minutes of trade, anything else that stands out for you?
Neeraj, I can see that many of the pharma names have actually started a pullback, and I believe that, you know, if we look at only 2 to 3 days perspective, some of these pharma names can actually witness some more buying coming in. So the top pick from this space will be Dr. Reddy's. We have already seen a large correction, and recently there has been some short covering, and I think that, you know, we might see some more follow-up buying coming in. So Dr. Reddy is a buy purely from a trading perspective. I'm looking for a target of 2680, and a stop loss can be maintained at 2550.
Okay, Abhijit as well as Shubham, gentlemen, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. You know, amongst the other things that has happened, and you know, two things that happened simultaneously over the last couple of days, which made a few people wonder. One of them was Reliance Infra getting that ceiling after a number of days and a number of not defaults really, but downgrades, etc., coming in. The fact that there has been an award given to Reliance Infra, which is such a large order, made a few people wonder. The stock, after gaining the last few days, is down about 3.5%. The other bit is Aditya Birla Capital, which isn't quite reacting too negatively to this news of Aditya Birla Sun Life looking to liquidate the realty fund. But the bigger thing that came out of that piece of news is the pressure that a large fund is having to get in suitors to develop the other property. They've cited a number of things. They went to potential suitors to sell the property, co-develop the property, something to that effect.
They managed, I think, 4 of them.
Some of them, but some of them not happening, and therefore, you know, the liquidation. Now, this happens off and on with funds. I'm not raising a question mark on that because the nature of the industry has changed so much. But it points to some pain within the real estate space. And the term was
for 6 years. I think they pushed it by one year.
Couple of years, yes. Two times,
yeah.
But it's having its pressure points on, it shows the pressure points within that space as well. Deven, just one question from my end on whether you think it's a prudent time to buy into any of the real estate names. I mean, everybody speaks about a Godrej Properties, maybe an Oberoi Realty to buy. Would you go ahead and do that? Or would you choose maybe a DLF or something like that? Or would you just stay away because there is pain within the system right now?
So Neeraj, I think I put across this onus of investment into the real estate space, particularly after the RERA implementation and the stricter regulations that we have. I would think that real estate play would be more suitable to the likes of LICs and the pension funds, where they have the investment horizon beyond 10 years, 25 years kind of a investment horizon that they have. Typically, the retail investors, or frankly, I think the individual investors too, I think who do not carry such kind of long horizons for investment, for them, I think the likes of real estate would not be, I think, a suitable investment play. That is what I take. At the same time, I think you must understand that the size of the investment which is required in this business and the patience or the time that is required to stay invested in this business is relatively, I think, longer now, I think, vis-a-vis before. So certainly, I think those who do not have the holding capacity, I think they must not invest in this particular area. My own take is that I think there are better alternatives elsewhere. Real estate per se, I have the relatively strong inclination that I think in given 2 to 3 years time, with the improvement in the economy, I think some of the unsold inventories will get sold out, and that could possibly give some kind of a leg up to individual stocks. So those investors who are already stuck into real estate, for them I think there may be a better opportunity to take an exit. But those who want to buy afresh, I think they may consider other alternatives for the given reason that I have explained.
You know, I don't want to talk about too many stocks, but Deven, one conviction call that you have, just one.
Well, I think I am having strong conviction with life insurance business, and for long I think we have been maintaining our view on the life insurance business. The basket of stocks in the life insurance business that we prefer to stay invested is likes of HDFC Life and even Bajaj Life. Both these companies, I think we have relatively strong conviction about investment. SBI Life, I think likewise is remaining, I think, a good story. But I think the first two probably I think is bringing more conviction in us, I think, to stay invested. Their ability to reach out to basically policy holders or the prospective life insurance buyer at a cheaper cost, I think, is one important aspect. Second aspect is, I think, the way in which I think they have built the product mix, I think, is important, wherein I think you are having the relatively low cost products, I think, which are giving you higher amount of premium. So that is again, I think, building the profitability for them. And the management of the funds eventually, I think, yielding higher results. These companies have proved their mettle on this front as well. So certainly, I think, if you look at 2 or 3 key parameters in the insurance business, I think they fit into these 2-3 companies very well. And that's where I believe that I think these companies could be, I think, right choice. They grow at 20-25% rate of cumulative growth on a year-over-year basis, which is giving me a larger visibility for next 5 to 10 years from this business. And I think, again, good management, good management, and I think the way in which I think the financials are managed, I guess I think these companies are good to stay invested.
463 for HDFC Life, and I remember Deven Choksey having this conviction on this stock even earlier when it was falling, and it had fallen all the way to 370. So happy for you, Deven, that the conviction has paid off so well, and hopefully it pays out in the future too. Thanks so much for taking the time out and speaking to us today.
Thank you.
Well, there's this big divide, isn't it? This quality is just getting that premium. HDFC AMC northwards of 2,000.
Because it's short in supply.
Yeah, yeah. Well, that's well put. Yes, at least perception of quality is short in supply. But HDFC AMC, HDFC Life, HDFC Bank, Bajaj Finance, Kotak Bank, the kind of valuations that these stocks are trading is quite astounding. Maybe we should talk about that too. But on the other side, a number of nuanced discussions coming up. Why are Indian companies increasingly finding them in an over-leveraged position? We discussed that predominantly that with Suhas Harinarayanan of JM Financial, but we'll try and do some other conversations as well with him. Stay tuned to Bloomberg Quint Live.